Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, the beauty of mathematics, part 46. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. On the Into the Cryptoverse website, we actually do have a free tier that gets you access to this chart. So if you want to check that out, you can do that. You can also get access to other stuff too with the free tier, but this is one of the charts I believe you get access to. As of, well, I'm making this video on April 30th, but let's just round, right? As of May 1st, 2024, total market cap of the cryptocurrency asset class is 2.215 trillion. The fair value logarithmic regression trend line is at 2.565 trillion, representing a slight undervaluation of 13.65%. So you can see that, last time we did this video, we had gone slightly overvalued. But it's just kind of come right back underneath it, which is something we said was a very likely outcome, especially if this ends up being sort of like a a mid-cycle top. Again, no guarantee that it is, but if it is like a 2019 mid-cycle top, sort of like rally into the rate cuts or rally before rate cuts, then fade into the rate cuts. If it is like that, then you can basically see what the script of it, the sort of the script it would follow. So yeah, we were overvalued technically last month. We did a video on that, but now we are back to being undervalued by about 13.65%. And you'll notice that throughout the years, even though this has stayed below that fair value logarithmic regression trend line, Bitcoin continues to take back a lot of that market share from the asset class as a whole, which is exactly what it did over here as well, right? So it should come as no surprise. But I did want to at least follow up with that. And you can kind of see that the fair value is just going to keep on slowly grinding higher. The lower bound on this is currently at around 850 billion or so, which is basically right around those lows. The highs are obviously a lot higher up, and probably we won't get there because you can see we didn't actually get there last cycle, but it is something to sort of keep an eye on. I do want to remember, to remind people too, you can also take the percent difference between the total market cap and the fair value logarithmic regression trend line, and you get something that looks like this. So, you can kind of see that it popped above the fair value, then it's fallen back below it. Again, like this is really common for it to do, this kind of stuff. Like last cycle, we popped above it, we fell back below. 2 cycles before that, we popped above it a couple times and then fell back below. And in this case, 2 cycles ago, we didn't really durably go back above it until the post-halving year, right? It wasn't until January 2013. And then the cycle after that, it wasn't until May of the post-halving year, right? And then last cycle, it wasn't until the very end of the halving year. So again, is it possible that it happens sooner? It is. And I do want to give validation to the sort of the left translated peak ideas, right? There's definitely a case to be made, and I'm not trying to diminish that, right? There is a case to be made, but there is also a compelling case that says, well, historically Bitcoin's topped out in Q4 of the post-halving year. Are we all trying to once again overcomplicate things and trying to sort of rush the peak when, maybe we just have to go through this process like we did last cycle. But last cycle, that mid-cycle top occurred in the pre-halving year because that's when rate cuts occurred. Perhaps this year or this cycle it occurs in the halving year because that's when rate cuts potentially occur. Now, right now, rate cuts are not really being, forecast to occur that much this year. But I think as these rate cuts continue to get priced out, what you see is that you see higher risk assets just keep on bleeding out to lower risk assets, and eventually I think the Fed will pivot. But so that's where we stand on the total market cap and fair value. And here again, this is the percent difference. So it still looks fairly normal. And if we did stay below the fair value or just kind of hung around there for a little bit and then came back down and then went back above it in the halving year or in the post-halving year in 2025, it would kind of be like always, like it wouldn't really be that surprising, and I do wonder if, everyone's trying to overcomplicate everything once again. If you think about the whole Bitcoin dominance stuff, right? And we talked about that forever. And obviously everyone wants alt season to occur. But the reality for things like, like Bitcoin dominance is that what happens is it goes up for basically 3 years and then it drops in the post-halving year. and I've gone through that before. I really have, and I just remember, I've especially last cycle, but you essentially just watch it go up for 3 years straight, right? I mean, from here to here is 155 weeks, right? I mean, you watch it, or 157, whatever. You see it just go up for 3 years, right? So what happens is you get this crazy alt season, over here that everyone loves, and then they spend the next 3 years buying altcoins as they bleed back to Bitcoin, and then over here everyone becomes a Bitcoin maxi, and then alt season occurs in the post-halving year. So you really do have to wonder if, once again, everyone's sort of fighting the trend, like everyone keeps calling the top on dominance, but maybe it just has to keep going up for a little while, and then once you get to the post-halving year, that's when you see this stuff more durably go above the fair value. Now, there's kind of some thought process around that, because if you think about it, we've had an inverted yield curve forever, right? I mean, let's just talk about it a little bit. We've had an inverted yield curve for 2 years now, and at some point we got to get the resolution of that. And I think kind of the argument between a left translated peak and a normal cycle peak comes around this idea of, well, when's the yield curve going to invert? I mean, I think you could respect the idea of someone who says, well, why not just rally until that actually happens, and which is a possibility. There's also a possibility that you just get rate cut sort of mid-cycle, like we got last cycle. The market cools off for a few, 6 to 9 months. Let me just pick back up in the post-halving year. There's a chance that happens too. And I also, I do think that one thing that can easily happen is recency bias. I think a lot of times people look at, inverted yield curves, and they just look at what happened in 2000 and 2008. But in reality, we've got a ton of different examples, and they all do different types of things. Coming out of the 1980s, what ended up happening, and I could see something like this playing out. So I wanted to just sort of describe what it would look like if it did happen. Coming out of the 1980s, you had an example where we had really high inflation, and right here, we had really high inflation, and we actually had a pretty large drop in the market, right? It was a pretty large drop in the market, and then we just rallied back up, right? And then we got a longer bear market that ended in 82. So there's part of me that wonders, could you get a scenario where unemployment rate prints 4%, everyone freaks out, right? Everyone freaks out because they're like, oh crap, it's here. And then rather than immediately deal with the consequences of all that, the Fed just turns the money printer back on. And then so you get this scare because of all that, which is a normal process in the cryptoverse. And then the Fed turns the money printer back on. But then by the end of 2025, we're like, oh crap, we turned it on too quickly. Inflation started to come back. Now we have to deal with sort of a longer bear market, right? In say 2026. So I do wonder if something like, I mean, this was a pretty big drop, guys. I mean, I know it doesn't look like much, but when the S&P's dropping 20%, I mean, you got to pay attention. That's not something that happens that often. So I do wonder about that sort of outcome. I think a lot of people just sort of look at these two outcomes, which again, that could happen too. I don't mean to discredit that idea. It depends on how bad things get, but you could envision a scenario where you still get sort of a peak at the normal time of the cycle if you get an uninverted yield curve and everyone freaks out, but rather than immediately deal with the consequences of all that, we just sort of, put a patch over it for another year or something. And then we face the consequences a little later on. Again, I don't know. That's one potential outcome. And there's also the outcome of 1946 to 1949, also during a period of high inflation, which I could honestly see happening as well. And in that case, you had sort of a deflationary crash, and then the market just sort of sprung back up in it would have been the post-election year, but I guess if you want to relate it to Bitcoin, it would be the post-halving year. So there's a lot of different examples that we could certainly look at, but I did want to at least talk a little bit about that because it does seem like there's a lot of sort of academic discussions between left translated peak or normal peak. And I find it funny because it seems like every cycle we try to make it feel like this time's different, but what if it's not? And what if this just ends up being sort of a mid-cycle top that's just occurring a little bit later because rate cuts are a little bit later. We cool off for a while and we just pick back up in the post halving year. Definitely an option. If that doesn't happen and we just pick up now, then I would start to believe more so in the left translated peak idea. I also wanted to mention in the short term, the thing to keep an eye on with Bitcoin is going to be your 100-day moving average, because that is where we are right now. We just swept these lows. So that's what I would keep an eye on. The 100-day SMA has been somewhat of a support here a couple times. The other two times it offered support for a couple of weeks, but still eventually fell below it. And other prior times you can see, getting to the 100-day, we got a little bit of a bounce above it. And then here we got a little bit of bounce off the 100-day. So, if the bulls are going to try to hold, I imagine they're going to try to make a stand here. If they don't hold it here, let's say, a week or two goes by, maybe you get a little bit of a bounce, maybe you don't. But regardless of what happens, if they don't hold it, then your next area that you're going to look at is you're going to be your bull market support band. And that's all the way down at around 55.5 to 56.2K, right? So that would be a little bit bigger of a drop. At this point, this is just a 20% drop like all the other 20% drops, right? I mean, this is kind of looks really familiar. A lot of these have been just 20 to 22% drops. So at this point, it's not really different. It could turn into something different if alt Bitcoin pairs start to break down, if ETH Bitcoin really durably starts to break down, and so on and so forth. So I would certainly keep an eye on that. But in the short term, we're still at the 100-day SMA, and we'll see what happens here. And again, you got a lot of stuff coming up this week. FOMC, a lot of labor market data, inflation is going to be coming out in a couple of weeks, or less than a couple of weeks, I believe. So definitely a lot of things to look at here over the next couple of weeks. If you guys like the content, I messed the flow up. But I always like to say that, I do eventually think the asset class will go to 10 trillion, plus or minus a few trillion. And as we go to sleep at night, we cannot help but wonder, what's a few $1 trillion among friends? See you guys next time. Bye.